we'll start from the top. I'm going to whistle through, and apologies for everyone who's been kept waiting. And I do appreciate the technical difficulties. But look, in terms of who we are and what we do, we monitor company websites for change, and we identify jobs that are being published in real time, and we provide data to our clients in regards to the vacancies. Now, what I mean, I'm going to whistle through this all quite quickly because we're tight for time now. But the short version is that we take the jobs from the company websites, we do duplicate them, we assign the data points, and we publish them to subscribers. Our clients include most of the leading recruitment firms in the UK and worldwide, and we've been going since 2006. And we've also been featured in a bunch of other media as well. We've regularly featured in journals like Bloomberg, Reuters, etc. We publish reports every month looking at industry trends. And so a lot of the data we're going to be talking about today is sourced and based from that. So we publish reports with companies like APSCO, CPL, Harrison Holgate, Hiring Hub, Morgan McKinley, Search, looking at different areas from law, technology, finance, insurance, etc. So in terms of today, what we're going to be doing is we're going to be looking at some of the key trends which are happening. We're going to be focusing on spotlighting a couple of key sectors across financial services, so banking, insurance, law, technology, real estate, life sciences. And, you know, look, I'm going to start with this, which is that when we're looking at the economic cycle, I think it's also important just to talk about structural changes. And there have been some quite big structural changes in the UK over the last few years. The first thing is that the pandemic led first to a move to work from home, and subsequently has led to a move to regionalisation. So what that means is that whereas when the pandemic happened, obviously everyone just goes working remotely, now organisations have been able to organize themselves where to have people spread across multiple locations, and they're creating clusters of offices in lower cost centers, which is leading to a big surge in areas across the North and the Midlands, and we're going to be looking at that later. The second big thing which has been changing is AI, automation, technology. That's changing the job market. Also, the war in Ukraine. We're looking at the defense industry as being one of the best performing areas year on year. We're looking at energy and the move to energy independence, what that means. These are all big ticket trends happening. But nonetheless, when we're looking at what's been happening in the UK economy, hang on a second. The key thing to understand is that you know, the picture's looking up, isn't it? Latest data suggests that the UK has come out of a technical recession, and that, you know, the economy is set to grow this year. We've seen a big uptick in vacancies Q1 compared to Q4. It's actually 18.6% up. Over the year, you know, if we continue at this rate, we think this year will be about 7% up on last year. Please note that's slightly distorted by Q1 last year being also really very, very busy. Anyway, what we would say is that word of caution, insofar the economy's picking up, inflation's still not falling at the level that the government would like. What that means is whereas the government was hoping interest rates would come down further, the Bank of England are unlikely to do that. And what that then means is that there's going to be continued pressure on all industries which are sensitive to higher interest rates. So that's property is a good example of that, for example. There also the other point as well, and this is a report that came out yesterday, which is talking about immigration. One of the points of feedback that's come back is that with immigration overall, the growth in the economy is due to immigration. That's the latest report findings. So what that means is that if you've got GDP growth, but you've got immigration growth outstripping GDP growth, then actually GDP per capita, which is wealth per person, doesn't go up. It can go down. And that's actually what's happening. We're seeing a cost of living crisis, and the big challenge, I think, for policymakers is how you address that. That's what's then leading to salary wage inflation. So last year saw record levels of salary rises again, which is causing inflation overall to remain sticky and not coming down as well. So the real challenge, I think, for policymakers is how do we, as an organisation, as a country, how do we get GDP per capita to increase? That's the big question. Um, anyway, looking at the regional trends, London has seen the biggest uplift this year to date, and there are lots of reasons for that. But I think obviously with the bounce back in tech and with financial services picking up too, those two areas are such big mainstays of the London economy that as they've resurged, there's been a resurgence. We've seen the uptick, and that's then gone straight through the south as well. Nonetheless, northern regions have been quieter this year. Touching onto banking, and I mentioned bankings first because it's one of the few industries in the UK which is, in terms of our balance of payments, actually generates wealth for the country. So it feeds into our trade deficit, everything else in terms of net services exported. And we have seen a significant uptick, and especially in the last few weeks. What's quite good news, I think, as well, is that there's been a growth in front office roles. So what I mean by front office roles is the roles which generate revenue and fees for the banks, and risk and compliance is actually shrinking relatively as a result. For a long time, especially during the Brexit process, what you were having risk and compliance within banks just bloating because they were moving to this dual regulatory framework. And what that meant is that you would have, them needing to look at, well, how much of this needs to be done? How much risk and compliance can we do for the EU from London? How much of this has to be moved to the EU? But then we've also got new risk and compliance function to look after the UK as well if we're going to have regulatory divergence. You get the picture. You just saw bloating. Now I think that will probably just streamline a little bit, but it will mean that, as a result, hopefully the banks are leaner and more profitable. Going next onto insurance, this has actually been one of the most profitable areas for the country in terms of the last few years, and one of the most resilient as well. So when you're looking at what's been happening, is that once the immediate pandemic period passed, the insurance sector just started booming and hasn't really stopped. And I think a lot of that is to do with risk, and the way that risk in every area is on the increase. Now, for anyone who's been watching the news, you would have seen what's been happening in Dubai in the last 24 hours. And that's, people are saying climate change. Yeah, they had 1 year's worth of rain in one day. Wow. That's a lot of rain. But in the same way, for anyone who lives in the UK, increasing parts of the country are becoming uninsurable even. And so for the insurance industry, got climate change as an issue. We've got geopolitical risk is also a big issue. With geopolitical risk, what we're seeing is we're, basically, for example, the shipping lanes now are under threat through the Gulf. Iran is saying they won't touch Chinese and Russian boats going through, but everyone else is fair game. That's what it seems like. So shipping insurance, other kinds of risk, second order risk as a result. They had to suspend all airway, all the air in and out of Israel got suspended for a day when the Iranians suddenly started sending bombs in. So there's geopolitical risk is on the rise. That's clear. And so as a result, you're seeing broking on the rise. More deals to be done, more deals to be done, more deals to be done. And that's just a reflection of the increased risk perspective and people realizing they need to insure themselves against that risk. So as a result, we think that this year, we could see even more vacancies than we did in 22, which was actually a record. Going to law, this is one's quite interesting. The legal sector is one of the ones which traditionally is quite conservative, but we've seen is that Going back to the trends of regionalisation, the legal sector, I think, is the one which has taken this the furthest out of all the main areas. And I think maybe it's because the law firms just an order of magnitude size less than in some of the big financial services institutions or some of the other big industries. So they have more capacity to just reallocate. And what we've seen is that there have been more vacancies across the north in this year than in London, which is phenomenal when you think about it. I mean, if you look at it, I mean, across the north, we're going to have 70% more legal vacancies than in 2019. So coming back to what I said earlier about cyclical trends and structural changes, yes, the economic cycle says the market's picking up, but the structural change means that the north is the big winner. So even though the sector is up about 30% up on last year, it's the north which is doing the best. For people in London, it's less than that. Now, going on to IT technology, I touched on this earlier. London has seen the biggest jump so far this year. Now, a big factor in this is the influence of VC and PE funding. So when VC and PE funding basically grows, then there are jobs created, and when it shrinks, then they stop hiring, and it's quite simple, not complicated. So actually, the second half of last year was actually a record period for VC funding, lots of deals getting done. So it's not a surprise, therefore, to see a big surge in job flow. Similarly, with the big tech companies which are present in the UK, whereas last year there was maybe a bit of a hiring freeze because they felt they'd overhired. Now that they've got through that period, this is now they're picking up again. So as a result, March of this year actually was a record in terms of vacancies over a 12-month period. So that's one to watch. I mean, financial services has picked up, but not really to the same extent. I'm whistling through quite quickly. Sorry, technical problems at the start. So real estate. Now, this also has picked up. And look, what we would say is that if you want kind of a little base metric of that, is that in Q1 of this year, we've had 10 weeks of 400 or more vacancies in the industry. And there were only 2 such equivalent weeks in all of Q4 last year. Growth here is outstripping the rest of the country, and the fact that interest rates are coming down is helping. But obviously, there are still questions as to commercial real estate. There are massive concerns about occupancy. Canary Wharf is an issue. There are other issues too. So it's very much a watch this space. But the hope is that it should be a better year for the real estate industry overall. I'm going to move on to this, and this is one of the last slides. Managed to get through this, make up for lost time. Look, life science is suffering a post-pandemic hangover. I think that's the best way of putting it. And just to illustrate it, I've cross-referenced life sciences against some of the other key industries across STEM. So energy and defense. And if you go back to even say 2021, which was peak pandemic, and you look at the big blue column, and that's basically what life sciences was doing. I mean, I think it was doing more jobs than the rest of the key STEM industries put together. Now it's probably on the verge of being overtaken by both aerospace and defense and energy. So, I mean, to give you an idea, energy, assuming Labour win the next election, they're planning on creating a new state-owned business called Great British Energy, which is going to be headquartered up in Scotland. And that's going to create a lot of jobs. And the idea is for that to be a competitor with British Gas and with other major utility companies, but also potentially to get involved in some of the upstream, downstream stuff as well. We'll see. The plans are still a bit fuzzy. But the whole point is that the war in Ukraine has meant that increasingly government is realizing that energy independence needs to happen. And 1/3 of our energy at the moment is currently imported. So in order to actually compensate for that, they've actually got to increase energy production in the UK by 50%. Clean tech will have a big part to play in that. And if you go back and think about the tech side of things, clean tech is forecast to be the fastest growing area of tech this coming year. Everything comes full cycle. One last one, just going to look at just very quickly who are the top performing companies. we would say that the top performing company this year so far has been, I've done this specifically for IT. So, you can do everything. This one I thought would be quite interesting for everyone to see. And what I've done is I've just done a Q on Q search. And so in this instance, we can see Lloyd's had 126 IT vacancies in Q4 last year versus 266 in Q1 of this year. So there's obviously quite a lot of change going on there. Now, point is, these kinds of reports, if you are interested, we can take any list of your clients, and what we can do is we can run the numbers for you, so you can see out of everyone you work with or have worked with over the last year, who's surging the most at the moment. An applied way to use the data to help you make some money. Anyway, so some key takeaways. We're running on the clock. Financial services, TMT, have seen the uplift. Life sciences in the doldrums. Regionalization is ongoing, and it's accelerating in certain sectors. Don't be fooled by the market cycle, which is distorting things when it comes to London surging back. We think the long-term trend is regionalisation. Nonetheless, London is picking up pace as the economic climate improves. Really, we need to look at the big questions are what happens to London Stock Exchange. We've seen a big issue coming in with ARM relisting. Now the CEO of Shell has come out and said he thinks that the stock price is undervalued, and we're at all-time low in terms of IPOs for London Stock Exchange. So for London, really, there needs to be some change there for London to start motoring again properly. And it's basically about the London Stock Exchange. What can the government do to get the London Stock Exchange motoring again? Okay, guys, and that's a wrap. Thank you very much. Sorry for the late start. I blame technology, but it was probably my fault. I probably didn't click the right button somewhere. But overall, thank you very much for coming and attending. If you would like to get a copy of the slides, we're going to send them to you. If you'd like to find out more about how we can build reporting for you, then get in touch. You've seen some of the case studies of the reporting which we've done so far. We are doing a free trial. If you'd like to get a free trial of our solution, then please do just register. You'll be getting a follow-up email from us today with all the information, and as part of that, we'll give you a 360 market analysis session to be focused in your area, which will be a deep dive related to this presentation today. You can contact us in lots and lots of different ways, and thank you very much for listening. So on that basis, we say thank you very much, and have a good afternoon, everybody.